Picture this. A single tweet from a CEO sends a company's share price soaring or crashing within minutes. Billions are made and lost before lunch. Welcome to the stock market, a place where fortunes can change faster than the weather. Welcome back to the Learning Studio, where we turn the complex world of economics into stories you'll actually remember. Today's topic, part of our Finance and Institutions series, is what the stock market is, how it works, why it matters for the economy, and how it affects your life, even if you've never bought a share. The full economics playlist is linked below in the description. What is the stock market? The stock market is a platform where companies raise money and investors buy ownership in those companies. When you buy a share, you own a small part of that company, along with its profits, risks, and future potential. Two main functions. 1. Capital raising. Companies sell shares to fund growth. 2. Wealth creation. Investors profit if share prices rise or companies pay dividends. Examples of major markets: New York Stock Exchange, SE, NASDAQ, Bombay Stock Exchange, BSE, London Stock Exchange, LSE. How it works. Prices are driven by supply and demand. If more people want a stock, the price goes up. If they want to sell, it goes down. But it's not just numbers. Emotions, news, global events, and even social media can move markets. Example: in early 2021, GameStop's share price skyrocketed due to a Reddit-fueled buying frenzy, defying traditional financial logic. Economic impact of the stock market. Economic indicator. Rising markets often signal optimism. Falling markets can warn of trouble. Wealth effect. When investors see their portfolios grow, they spend more, boosting the economy. Capital allocation. Directs money to companies with strong growth potential. But overheated markets can create bubbles, and sudden crashes can trigger recessions, as in 1929 and 2008. Quote to remember: the stock market is filled with individuals who know the price of everything, but the value of nothing. Philip Fisher. Why it matters to you. Even if you don't invest, the stock market influences your retirement savings, job security, and even the cost of goods. When markets are strong, companies expand and hire. When they're weak, layoffs and cutbacks follow. Understanding how the market works helps you make informed financial decisions and read the pulse of the economy. Coming up next, game theory and strategic thinking, the economics of winning moves. Follow us on YouTube, Instagram, and TikTok. Add platform icons in editing for more smart, animated lessons on money, markets, and economic forces. This is the Learning Studio, where we make sense of the systems that shape our lives.